Welcome to our deep dive into Microsoft's latest earnings results and financial performance. As a global leader in cloud and productivity software, Microsoft's numbers are a key indicator of enterprise tech spending and the rapid adoption of AI services. Before we analyze these critical data points, please like this video and subscribe for more professional market breakdowns. Let's get started. We begin with Microsoft's current standing on the Nasdaq stock market. As of the latest update, MSFT is trading at $397.23, showing a slight decline of 0.31%. The chart highlights the scale of this tech giant, which remains one of the most valuable companies in the world. Looking at the 52-week range and the daily volume, we see the massive liquidity and institutional interest that defines MSFT's market presence. The stock is currently navigating a pivotal range, and this market snapshot provides the necessary backdrop as we transition from daily price action into the fundamental financial statements. Understanding the current valuation is essential as we evaluate the underlying revenue and profit data that will likely drive the next major trend in Microsoft's long-term growth story. As a core holding for many portfolios, MSFT's performance here often dictates broader technology sector sentiment. The income statement reveals the massive scale of Microsoft's quarterly operations. Total revenue for the last reported quarter reached $81.27 billion, marking a 4.63% increase compared to the previous quarter and an 18.43% year-over-year growth. Gross profit remained exceptionally strong at $55.30 billion for the quarter, with a 16.39% year-over-year increase. Net income for the most recent period was $38.46 billion. These figures highlight Microsoft's incredible ability to generate high-margin revenue across its diverse software and cloud portfolio. The visual data shows a consistent quarterly revenue climb, reflecting the company's success in scaling its digital services. For investors, the key narrative is the company's ability to maintain these best-in-class margins while aggressively investing in new AI capabilities. The TTM revenue of over $305 billion underscores Microsoft's dominant position in the global digital economy. Microsoft's balance sheet reflects a massive global infrastructure and financial strength. Total assets for the most recent quarter reached $665.30 billion, representing a 4.55% increase from the previous period and nearly 25% growth year over year. On the other side of the ledger, total liabilities stood at $274.43 billion. This results in a massive total equity position of $390.88 billion. The year-over-year growth in total equity has been significant, rising nearly 30% since the previous fiscal year. This robust expansion of the asset base, combined with a rock-solid equity position, underscores Microsoft's role as a financial powerhouse. For analysts, the relationship between the company's growing cloud infrastructure and its rising equity is a key indicator of how efficiently management is deploying capital to secure its leadership in the AI era. The balance sheet provides a massive fortress for future growth. Cash flow generation remains a foundational strength for Microsoft. The company reported $35.76 billion in cash from operating activities for the recent quarter, contributing to a full-year total of over $160 billion. Free cash flow for the quarter was reported at $5.88 billion, while the full-year 2025 free cash flow reached over $77 billion. On the investing side, capital expenditures remain a major focus, with over $22.7 billion deployed recently to build out AI and cloud capacity. Financing activities also show substantial movement, including $17.62 billion in outflows for debt and shareholder returns. Despite the massive scale of these investments, the company's ability to generate tens of billions in annual operating cash is the engine that allows it to maintain its competitive edge while rewarding shareholders. For investors, this consistent cash production is the bedrock of Microsoft's valuation and its ability to fund the next generation of technological innovation. Looking at key valuation ratios, Microsoft's stock reflects its premium position in the technology sector. The price-to-earnings ratio, or P PE is currently around 30.26, while the price to sales ratio stands at 9.73. The enterprise value has officially crossed the $1 trillion mark, reaching over $1.04 trillion. These multiples suggest that investors are willing to pay a premium for Microsoft's high-quality earnings and its dominant market position in cloud and software. The price-to-cash flow ratio also remains robust at over 18 times. While these ratios are high relative to the broader market, they have seen some compression from previous peaks, potentially offering a more attractive entry point for long-term growth investors. For analysts, the focus is on whether Microsoft's projected AI-driven revenue can sustain and eventually expand these valuation multiples. The enterprise value to EBITDA ratio of 16.20 further highlights the company's strong operational profitability relative to its overall market valuation. Microsoft's commitment to returning capital is evidenced by its consistent dividend growth. Payouts are made quarterly, with the most recent dividend per share at $0.91. The company has a long history of raising these payouts, with the 2025 fiscal year showing a total dividend per share of $3.32. Currently, the dividend yield stands at 0.85%, with the next payment date scheduled for March 12, 2026. The payout ratio remains very healthy and sustainable, averaging around 24 to 28% over the last several years. This disciplined payout strategy ensures that Microsoft can reward long-term shareholders while retaining roughly three-quarters of its massive earnings to reinvest in its AI and cloud infrastructure. For income-focused investors, MSFT remains a core holding that offers a reliable and growing stream of income backed by one of the world's most profitable business models. The steady upward trend in dividends per share reflects management's confidence in the company's long-term cash generation. The EPS and revenue snapshot provides a look at Microsoft's consistent track record of exceeding expectations. In the most recent quarter, the company reported an EPS of $4.14, beating the 3.91 estimate by 6%. This follows a streak of significant beats, including a 12% surprise in late 2025 and a 7% surprise in early 2025. Revenue for the period reached $81.27 billion, slightly ahead of the $80.31 billion forecast. Looking ahead to the next report date in April 2026, analysts are expecting an EPS of $4.05 on revenue of approximately $81.3 billion. The long-term forecast for the remainder of 2026 and 2027 shows a projected steady climb in profitability, with Q2 2027 estimates reaching toward $4.68. This consistent beat and raise performance is a primary driver of investor confidence and has been a major tailwind for the stock's valuation throughout the current fiscal year. Finally, we analyze Microsoft's performance by segment and region. The company's total annual revenue of over $281 billion is driven primarily by the Intelligent Cloud segment, which reached $120.81 billion in the last year. Productivity and business processes also contributed significantly at over $77 billion. The United States remains the dominant geographical market, accounting for over $144 billion of total sales, up from $124 billion the previous year. This diverse revenue mix, spanning across enterprise cloud, office productivity, and personal computing, provides Microsoft with an incredibly resilient business model. The rapid growth of the Intelligent Cloud segment, in particular, highlights the company's successful transition into a cloud-first powerhouse. This segmental strength, combined with broad-based geographical growth, ensures that Microsoft can capture diverse spending trends across the global technology landscape, providing a solid foundation for its next decade of growth and innovation. In conclusion, Microsoft's latest financial data reveals a company at the absolute forefront of the enterprise technology shift, with the financial muscle to back its AI ambitions. With consistent earnings beats, a fortress-like balance sheet, and a dominant position in the global cloud market, the fundamental story for MSFT remains exceptionally strong. While valuation multiples remain at a premium, the company's robust cash flow and growing dividends continue to attract long-term institutional and retail capital. Thank you for joining us for this deep dive. Don't forget to like, subscribe, and hit the notification bell for more institutional grade market analysis. We'll see you in the next video.